If you're on Social Security or disability benefits, the next 10 days matter. A change taking effect January 1st could leave you with less usable money each month once Medicare costs and income rules kick in, and many people won't realize it until their January check hits. Hi everyone, and welcome back to U.S. Pension Insight. I'm Michael Harris. By the end of this video, you'll know whether the changes starting January 1st actually help you, quietly hurt you, or don't affect you at all, and what you still have time to fix before the year ends. As we go through this, you're going to fall into one of three groups, and one of those groups is at the highest risk of problems once January arrives. Make sure to hit like, share, and subscribe to U.S. Pension Insight so you stay informed. As of today, December 22nd, there is a lot of confusion surrounding Social Security and disability benefits. People are hearing bits and pieces about benefit increases, Medicare changes, income limits, disability rules, and even stimulus rumors. When information comes in fragments like this, it creates stress, especially for people living on fixed incomes who depend on predictable income to cover rent, groceries, utilities, and medical care. The biggest issue is that most updates focus on surface-level headlines, not on what actually happens to your usable income once everything is applied. You've probably already heard the headline: Social Security benefits are increasing starting January 1st. That headline sounds reassuring, and for some people, it will be helpful. But for many others, it's misleading because it doesn't explain what happens behind the scenes at the same time. It doesn't explain what gets deducted, what rules are triggered, or why two people with very similar benefits can see very different January deposits. This is where people get caught off guard. Even when benefits increase on paper, other changes can quietly reduce what you actually receive. These changes aren't errors. They're built into the system. They just don't get talked about clearly. This is why many beneficiaries open their January deposit and feel like the increase disappeared, even though it technically happened. Before we talk about numbers, let's slow this down and make it personal. At this point, every viewer watching falls into one of three groups. Group 1 includes people whose situation is relatively stable. They're not working, their Medicare premiums stay consistent, and no additional income-related rules apply. Their January check looks a bit higher, and nothing interferes with it. Group 2 includes people who do receive the increase, but part of it gets quietly offset. This could be because of Medicare premium increases, income-related adjustments, or deductions that reduce the net amount they actually receive. On paper, their benefit rises, but in reality, the extra money feels much smaller than expected. Group 3 is the highest risk group. These are people whose usable income barely changes or even feels lower, or who face problems because of earnings limits, disability rules, reporting issues, or timing delays. If you're in this third group, the next sections matter the most. These outcomes don't happen randomly. They're triggered by very specific rules, and small misunderstandings can create serious financial stress. January is especially challenging because multiple adjustments happen at once, and the effects don't always show up immediately. When changes overlap, it becomes harder to tell what caused what. For retirees who are still working, earnings limits are a major factor. Going over those limits doesn't always cause an immediate reduction. In many cases, Social Security adjusts benefits later in the year, which is why people are shocked when money is suddenly withheld months after they earn the income. That delay makes planning much harder. For people receiving disability benefits, substantial gainful activity limits are even more sensitive. Going over those limits can trigger benefit reviews, suspensions, or long delays before payments are restored. Even short-term income spikes over time or seasonal work can cause problems if they aren't tracked carefully. For Medicare recipients, premiums are deducted automatically before your payment ever reaches your bank account. That means your usable income is reduced instantly. When Medicare deductions increase at the same time as other rule changes, it can feel like your benefit went backward. This combination is why January often feels like a financial shock instead of a fresh start. I want to share a real-world example that illustrates this clearly. A subscriber recently wrote to me about her experience. She lives entirely on Social Security and carefully tracks her spending. When she heard about the January increase, she felt a sense of relief and started planning how that extra money might help with groceries and prescription costs. But once Medicare premiums were deducted and rising everyday costs were factored in, her real increase worked out to roughly $1 per day. Nothing went wrong. No mistake was made. The system worked exactly as designed, but the outcome didn't match what she expected. This experience is far more common than most people realize, especially for seniors and people on disability living on fixed incomes. Now let's answer the main question you came here for. What does this actually mean for your January check? Yes, there is a 2.8% cost of living adjustment starting January 1st. That increase is applied to your benefit amount. But what you actually receive depends on what comes out afterward. Medicare premiums, income-related deductions, earnings rules, and disability thresholds all interact with that increase. For some people, the increase is noticeable and helpful. For others, it's partially offset. And for some, the change triggers adjustments that don't show up until later, making January confusing or even stressful. This is why focusing on net income matters more than focusing on percentages or headlines. Now that you understand how the system works, let's talk about what you can still do before January arrives. First, calculate your real number. Take your current benefit amount, apply the increase, and then subtract Medicare premiums and any known deductions. That final figure is what you should budget with, not the headline percentage. Second, revise your January budget now. Don't wait until the first deposit arrives. Knowing what to expect reduces stress and helps you avoid difficult choices later in the month. Third, if you qualify for assistance programs related to food, energy bills, prescription drugs, or healthcare, apply before the end of December. Many programs use current income levels when determining eligibility, and applying sooner can sometimes make a difference. Fourth, if you're working while receiving benefits, double-check earnings limits and track income carefully. Even small overages can create delayed consequences that show up later in the year. Fifth, review your Social Security records. Make sure your direct deposit information and contact details are correct, so there are no processing delays or missed payments. Sixth, check your My Social Security account once updated benefit amounts are posted. This helps you confirm what's coming and spot potential issues early. Before we wrap up, let's briefly address stimulus talk because it keeps coming up in the comments. As of today, December 22nd, nothing has been approved. There is no guaranteed payment and no confirmed timeline. If something does happen later in 2026, it should be treated as a bonus, not something to rely on for essential expenses or monthly budgeting. This is a lot to process, especially during the holidays. When benefits rise slowly while everyday costs rise quickly, frustration is completely understandable. But knowing what's coming before January gives you control. Preparation now can prevent panic later. You're not alone in this. Millions of Americans are navigating the same changes, asking the same questions, and trying to make careful decisions with limited income. Staying informed is one of the most powerful tools you have. Before we close, I want to hear from you. Which group do you think you fall into? Stable, partially offset, or highest risk? What concerns you most as January approaches? Leave a comment and let me know. To bring everything together, in just 10 days, multiple changes take effect for Social Security and disability beneficiaries. Some people benefit, some feel the impact quietly, and some face real challenges. Understanding where you fall and taking action now can make January far less stressful and give you confidence moving into the new year. Thank you for spending your time with me today on U.S. Pension Insight. If this video helped you, please like it, share it with someone who could use this information, and subscribe so you don't miss future updates. And don't forget to leave a comment below. I read every one, and they help guide what we cover next. I'm Michael Harris, and I'll see you in the next video.